Let's go to the beautiful city of London. Meet Sam. He owns a salon in London, inherited from his grandpa. His grandpa established Salon in the year 1950. Every day, Sam opens his salon and works with his other staff to support his family. Sam is earning decent cash flow from day to day operations. But Sam isn't passionate about cutting hair. Instead, he dreams of becoming a model in Paris. To take such a risk, he needs sufficient funds to start his career and take care of his family. So he decides to sell his salon. Hello everyone, my name is Rajat and welcome to my channel RM Finance. In today's video, we are diving into the concept of present value, a powerful tool that helps investors determine the true worth of an investment today. Let's get back to our topic. After meeting several investors and presenting the sale of his salon, Sam finally finds Bob, who is interested in buying his salon. Sam and Bob decided to meet at the restaurant.
Sam, what is your demand?
Look, Bob, the shop is an inherent property, and my family is dependent on its income. I think £5 million is a fair deal.
I understand how you feel, but please consider that the market value of your shop may not be as high as you expect.
Bob, I'm open to negotiation.
Thanks, Sam. Before making an offer, I'd like to consult with my financial advisor.
Okay. Bob, I will wait for your call. Hello.
Hi, Sam. My name is Abdul, calling from Bob's office.
Hi, Abdul.
Sam, could you share your shop's financial statements for the past 5 years? This will help us determine a fair offer price.
Sure. I'll provide all the relevant documents by the end of the day.
Good morning, Bob. Bob, I've reviewed Sam's financial reports from the past 5 years. Let me explain it simply. Let's head to the whiteboard. Sam follows basic cash accounting, and based on his past performance, both his cash flow and revenue have been growing at a steady rate of 10% annually. I expect the same growth to continue in the coming years. However, Sam withdraws all his profits without reinvesting in the business. Additionally, a new metro route near his shop was recently approved. I recommend keeping the shop operational and selling the property after 10 years to maximize returns. Considering its location, I estimate that in 10 years the property could be sold for approximately £6 million.
Wow, this seems like a fair deal. Sam is asking for £5 million, and we can generate additional cash flow from both the property's sale and 10 years of operational earning.
Haha, Bob, you're overlooking something. Let me explain. Bob, could you please share the source of funds for investing in Sam's salon?
I will fund it using the profits from my steel business.
That's great. You're reinvesting your business profits into the salon. How do you plan to utilize your funds if you choose not to invest in Sam's salon?
I will either reinvest it back into my business or deposit it in the bank.
I notice that your business ROI is 12%, while the bank currently offers a 5% interest rate on deposits. If you had to choose between reinvesting in your business or depositing the funds in the bank, which option would you prefer?
Definitely. I would choose to reinvest in the business since it offers a higher ROI.
If you invest in the salon, you will forego the 12% return from your business. This is called opportunity cost. By definition, opportunity cost is the value of the best alternative that is not chosen when making a decision. It is the cost of giving up something to get something else. In your case, the opportunity cost is 12%, which you are foregoing by not choosing to reinvest in your business. So, you need to discount Sam's future cash flow with 12% to get the present value. Present value is the current value of a future sum of money or stream of cash flows. Now, we will calculate present value. Present value formula is future value divided by 1 plus interest rate power by number of periods. In other words, we need to discount the future value to determine its present value. Let's understand this using a time series. As you move further from period 0, the present value decreases. This is because money today holds more value than the same amount received 10 years later. You can earn more today by reinvesting in your steel business rather than receiving the same amount after the end of year 10. Now, let's place Sam's cash flow in a time series. His cash flow is growing at a rate of 10% year over year. In year 10, we will dispose of the Salon for £6 million. If we add the final year's cash flow with the disposal of business, we will get £6.214 million. Present value factor, we calculate by 1 divided by 1 plus discount rate power by number of periods. Multiply future cash flow with the present value factor is used to get the present value. Now we will sum all the 10 years present value to know the current value of Sam's shop today, or year 0. So Sam's shop's present value is £2.84 million, which is not close to his demand. Investing £2.84 million, whether in your steel business or Sam's shop, will generate the same return, that is 12%. At this point, your cost of fund will equal the return on investment. I prepared a chart that will help you negotiate. I calculated the present value by using different discount rates. For example, if you invest £5.4 million, that will generate 4% return, and your cost of fund is 12%, that will result in a minus 8% net return. Cementiously, if you invest £1.6 million, that will result in a positive 8% net return.
Haha, wow! You really are a genius, Abdul.
Ha ha ha. It's my job, Bob.
Thanks for your time, Abdul. Now it's time to visit Sam's place. Sam, I want to make an offer for your salon.
Fingers crossed for the best.
Sam, I'd like to offer you £2.1 million for your salon.
OMG, that's not even half of what I'm asking.
Boy, I am a businessman. I can't make decisions on emotion. Before making an offer, I consider all the relevant factors. This is the best offer I can make.
Sorry, Bob, but I can't accept your offer.
Okay, Sam, I'll revise my offer. My final offer is £2.5 million.
Bob, give me some time to decide.
Okay, Sam, give me a call once you've made your decision.
Okay, Bob.
So, what do you think Sam should do? I'm leaving the choice to you. Drop a comment below and let me know. Should Sam sell his shop for £2.5 million or wait for another investor, or keep it operational? I'd love to hear your thoughts. Thanks for watching. Don't forget to subscribe to my channel for more content on finance, investing, and decision making. Until next time, take care and see you soon.